All right, so I wanted to talk about what's been happening in the market, okay? And for the first, we're through 9 months of the year, and we're in what's called the slow season right now. October, November, December, as we move into Halloween, Thanksgiving, and Christmas. Those tend to be the slowest times in the DMV. So let's take a look back here. Now you see that all of the numbers are lower than last year, and this isn't a surprise. The impact of high interest rates has really had an impact on the market. Simply put, if you are sitting on a house and you refinanced in 2020, 21, 22 at 3% interest rate or even lower, there isn't an incentive to move unless you have an emotional need to do so, because now you're looking at 7% interest rates. And so, obviously, a lot of the factors that impact real estate have been negatively impacted since June of last year. So, if we look at showings, showings are at its lowest level over the last 5 years. The new purchase contracts are also down. That means that houses that have gone under contract were at the lowest level in the last 5 years. Median days to contract are up, but not by much. They're up by just, houses are still going under contract in about 2 weeks on average in the DMV. Listings are down, which makes sense because people are, again, if they have that, don't have that emotional need, they're staying in their house. And then the list price ratio, or sorry, median list price, we're still seeing prices at the highest level over the last 5 years. Now, I want to show you this chart. Okay, so I track what's called the absorption rate, and the absorption rate simply says that assuming nothing else comes on the market, how long is it going to take for the current inventory to be absorbed? So this is the absorption rate. Anything under 3 is a seller's market. Anything between 3 and 6 is a buyer's market, and anything above 6 months is a buyer's market. Before we talk about the current day, I think it is pretty fascinating. If you go back and you look, the market crashed in 2008 in the middle of the year, but the markers were actually there that in 2006 and 2007. It just took until the middle of 2008 for the crash to actually happen. So absorption rate is a really good predictor of where things are at. And what you can see here is naturally during the pandemic, we were in an uber seller's market, under 1 month supply. Houses were coming on the market, they were being bid up over and over and over again. The difference between 2023 and 2020 and those years is back in 2020 through the middle of 2022, you would see 5 to 12 offers on properties. There was a property in Bethesda that got 150,000 above asking price. You heard stories in Texas of houses selling for 400,000 more. Okay, this was a crazy time. You were competing against buyers were competing against 10 to 12 different buyers, and now what we're seeing is that it's like 1 to 3 buyers that are competing on houses. Still, the seller is getting usually the price that they want. When we're selling our houses, we're still selling them above asking price. They're just not going 4 to 5% above. They're going at list price or 1% above. So why am I sharing all this with you? There is still great opportunity. We are helping buyers, and buyers need houses. They're looking for houses to buy. We have clients all over Fairfax County, some in Arlington and the surrounding areas, that just can't find houses. So if your house is staged well, if it's marketed well, if it's priced well, you are doing well in this market. This supply crunch that we're talking about here is a real thing, and sellers stand to gain. So anyway, I wanted to share this with you. If you have any questions, if you know anybody who is talking about moving, wants some advice, please reach out. I'd be happy to help them. Thank you.